watch out for this red zone and green zone. We were talking about it yesterday, you know. And is it not true that it's sideways, down, and then up? Which enforces the ability to come back down to the red zone, so no stops should be dragged on top of that red zone. But if we want to use this little range as well, I mean, that should be fine. Any stops dragged above the red zone are going to get smoked, let alone any stops that are dragged inside of this little range, they're going to get smoked for sure. So, you know, hedges back down to the green zone could be on the table. If you're hedging it, then you can hedge within your position size. So even if you're wrong on your hedge, you're still making money, just less. That's in a nutshell why it's so attractive to the hedge funds, because they can try shorting all day long and lose money all day long trying to catch their hedge, and it won't catch up with how much money they're making on their core, because their core is so big. It is the fund. You know, it's all the assets that they've been buying for nearly a century. And they're protecting it by hedging it so that they don't have to sell it. Because if they sell it, somebody might not want to sell it back to them at the price that they got it for, and they might want a lot more for it. Yeah, it's to me, that's like a test of whether or not people were paying attention long ago. It's like, did you value this little range that we had here? It's like, you might be a long-term trader, but if we spend a long time in this little range, then what are you going to do? A lot of people, they just don't, they're not compatible. They're like a bot, you know? Like, I'm a long-term trader, so it's in a small range, even for a long time, I'm just an idiot. Well, it is a small range that they don't really find much value in because they're long-term traders. I'm like, these are all weaknesses, you know, that close your mind. And I'm like, well, that's strange, because it's not like they don't have the time to think about it. They sit down for 5 minutes and buy a trade and hold it for 50 years. And yeah, I mean, that's the normal way. But it used to be. It's not anymore. Now the normal way is to get involved with options because you heard somebody else was doing it and you got jealous. I'm like, it's so simple though. So of course, we have to consider coming back to the red zone from the green zone, of course. There's small short-term range. We'll go over this actually. See how far back she goes. All the way till back here on June 18th. It was a pretty significant consolidation, only for those that were there at 2 p.m. though. That's the irony of it, is it's not a consolidation for everyone because everyone had to survive most of the day in order to have it. And they're testing people. Most people don't care if it's not paying them right now or benefiting them in the moment, then they don't want to have anything to do with it. Learning? Pfft, no, they're only there to make money. And as grindy as it may seem, we have went to a relatively even distance above the red zone that we went below it. Not quite the same distance, but the whole point is to test the red zone from above. So any stops dragged above the red zone, even inside of the red zone, they could get smoked out. Anybody that puts their stop anywhere close to where this trend broke is also potentially in for it. So the move was satisfactory. They followed the plan though, to a T. So of course we've finally connected with the red zone. All hedges that have been made must be made safe, if any hedges at all. I know that exposure to the earnings is incredibly valuable, and especially if we get a huge move on the earnings report, having a stop and profit on a position is really valuable because you have a pretty good chance of being in for the move on the report release. And there's 3 of them. You know, what I've seen over the past little while is we've been dribbling off from the spike out of the top of the red zone and basically coming back for the people that were late in the trend break. It's nothing out of ordinary. In fact, it usually pulls back more. Usually. So still, just remember when you buy above the hourly POC, which is nowhere near as good as what it was offering yesterday. The name of the game was to hold from yesterday, or the day before, or the day before that, because those were actual lows. They came up and broke the trend, and they were from the green zone to the red zone, not buying in the red zone. But if you took a hedge from the red zone, I mean, that could hold potentially until the report. Is the name of the game to keep the core and be hedged for the report? Because there's no better position that you could be in. Or you could try and guess what direction you want it to move, and go in one position and have it attack you from all directions like all the ordinary people of the day. But to hedge a core is the best way to do it for today. Because in the event that you have a core hedged, then it can move either direction. You'll get stopped out on one with a profit, the other one will be profitable. It takes work to develop the hedge, takes work to develop the core. It doesn't come easy to anybody, but it has to be something you want. That's the funny part. Many people think it's too hard, too much work. But it's like, to have
exposure in both directions and know that you'll be in on whatever large move happens, whether or not it's the hedge that benefits or the core. You know, you have options to choose to sell either one of those trades to, you know, move your stop around on either one of those trades. But if you make it safe on both of those trades, and then we have the report in the middle of both of those safe trades, what better position could you fabricate in your life, you know, while you're doing this? It's way better than just picking the direction, you know, because you know that there's no risk to, you know, it moving without you in it. Whereas if you just have one position, there is a risk that it moves the opposite direction of your position, and you'll be forced to play the game. 95% of the people will be positioned one direction, hoping that their direction is the one. And it's like people wonder why they lose money buying in the red zone. I'm like, go back to the drawing board on that one. Because they're not originally thinking about the need to use that level. They see it used and then they want it for themselves. That's late. That's not thinking. That's copy and paste trading. And the market doesn't have any time for that. It wants you to be original. It wants you to understand the components and the variables so that you can take action on a sensible, logical decision and an understanding. And how on earth do people ever develop an understanding if they neglect learning so much? Because if they're not making money now, then they don't want to have anything to do with it. Oh, it's slow. Oh, it's a range day. Oh, it's not moving the way I want it to. All excuses to make you weaker, to make you not understand the end of the day. You know, and even when people have a profit, you know, they can get to their head and they can end their days on that, not understanding how the next big danger unfolds for those that continued. And a stop at the extreme of today is not even a stop at the hourly POC. It's above it. So it's just like settling for less, and expect the hedges to be knocked out, so make sure you're paid on them. But of course, the name of the game when we got on top of that red zone was to get back to it and smash it from above. And if you took part in that, then make sure that you're safe. That's all I have to say. To be too aggressive about anything today is not good, because they overlap everyone by the end of it all. Anybody that wants exposure from today is late, so they're going to be treated like this. That's okay, because we are closing in on the report. I'll mark it. You know what this reminds me of is a traditional 11 low zone. The pop that gives hope and it comes back for stealing the stops, and then we get above the pop. Could be the cause of the trend break, but the stops are being stolen. Because they know that people will trade in there for the sake of trading. Yet there's nothing that happened in there that anyone's jealous about. But it's the place that they have for the time that they have. So it's good enough for them because of that. And I'm like, well, hold on. You can choose when you make a decision. Certain times should be good for you, certain times should be bad for you. You know, you shouldn't settle for things that aren't good enough for you. And if you want to be the best, then don't settle for anything less than it. Which means not buying in the stupid freaking red zone. And when you do get the green zone, you hold it to the red zone, and if you hedge it from the red zone, you might find a position that overlaps your one in the green. You know, when you start off the day with nothing, the name of the game is to end it with a situation that's safe and exposed. But if you get hung up on the last little bit of profit in your last contract, it's always going to be a problem. You know, you got to get over that hurdle. Hefty movement into the imbalance, almost at the 261, at a 241 right now. This is the kind of preliminary movements we can get before the reports are released. Coming back to test the green zone is on the table. I'm going for the green zone. The green zone. If anybody did take it, you want to make sure it's safe by now. These moves are serious. They don't have to play nice. The B point, of course, is in the red zone. The B point is roughly around the 61 too, so the very similar kind of movement we've seen all day, where our consolidation is up near a 61. We spike down from it, end up back at the POC, and it's the 61. And this time it's going to be the VWAP as well. Here we go. Point on imbalance. And the next pullback we make could be something like a fourth wave, right in the middle of the range. The green zone is the middle. The distance that we made on the top of the red equal to that on the bottom of the green. More important than getting it to a 261. This is that move coming down to the green zone. It's like it's listening. Like I said, there's a lot of risk with the moves. Like if somebody took that and you didn't take profit at the right targets and you tried to move your stops around, you could have lost money on it if you didn't do it right. So I'm just like, well, You follow the right system, you make it safe, and you're comfortable with the environment and the situation, you can do everything quickly enough. That's the key. When you see a target, to make sure you're safe by it. Like when you've taken all the risk off because you've paid yourself and you've got exposure still, the stop is profitable regardless of its hit. It's the only way to be in for the earnings, in my opinion. The only way. Because if you don't have it that way, then you're taking a risk on the earnings, and I don't agree with that.